Welcome everyone, my name's Dr Amale Scally, Chief Examiner for Foundations of Finance. I have Dr John Vaz, Director of Education in our department, who will talk to us about what finance is today. So John, how would you define the word finance?
Well, finance, in simple terms, is about managing money. And managing money in all its forms. So I think perhaps let's talk about what money is first. Go to someone to pay them. You don't actually take money notes out. You actually say, I'll pay someone by transferring an amount through my credit card or as a direct debit from my bank account or my PayPal account. They're all forms of money. Okay. It must be a medium of exchange. In other words, you and I are happy to accept that money and exchange goods and services. Okay, it's a unit of account, so we know how much it's worth, and it's a store of value. So when I give it to you, it doesn't disappear. It keeps on having value, but in time, of course, as we will learn, it changes in terms of time.
You mean that the value of money changes over time?
Well, a dollar today is worth more than a dollar tomorrow, and it's true in a real sense because, for example, if I said to you, Amale, give me $100 today and I'll give it back to you in a year's time, would you be happy to just get $100 back?
No.
You'd want something more because you've given up the use of that money. So finance provides the ability to transfer money in time. So it's got a time machine, a bit like TARDIS in Doctor Who. You put the money into TARDIS, finance, and it comes up a bit later with a bit more, hopefully.
Yes.
So finance provides for that facility.
So when we're talking about money, you've talked about the role of money, what it does for us. How is it created? I don't quite understand the creation of money.
We know the most common form of money, banknotes and so on. So the Reserve Bank will go and print this money from time to time, and so you can get banknotes and go exchange that money. So that's one form of money. The other way in which money is created is the Reserve Bank says, okay, in the case of Commonwealth Bank, I recognise the Commonwealth Bank has this much money in its account, and it'll place that money into the account in the times it creates the money, and the banks then go on and lend it. So banks create the money in actual fact by lending it to you and I.
So it's not just the central bank creating money, so it's also the banks within
So if the central bank provides credit to the bank, the bank will then take that credit, and we call that liquidity, take that credit and provide it to you and me by providing more credit for a credit card, by lending us more money to go buy houses, by providing us money to go buy cars.
So does that mean a bank uses my savings, perhaps, and lends them to a company?
So correct. So not only does the bank get money through central bank facilities, it also gets your and my deposits. It also gets money, for example, from the market. So the banks will issue what we call bonds or issue debt. It'll raise money from the financial markets, so it can in fact lend you that money to go buy a house or whatever it is. So it gets money from a number of sources, including your deposits. So it takes your money and lends it to others who need it. So it provides that time machine, that facilitation. It transfers money from those who have it to those who need it.
When we were talking about the pooling of money or banks taking different funds and on-lending them, are banks the only institutions within the market that do that?
No, there's a number of institutions or types of institutions which make money available to people who need it or companies that need it, and capture the money from people who don't need it, if you like, want to invest it. So this can happen through different types of financial markets. And we talk about markets, we talk about capital markets, things for more than 12 months, longer term, and money markets. Now, if I want to invest, for example, in the stock market, I could go buy some shares, give up my money, and sometime later, hopefully, I can sell those shares at a higher price than I paid for them, and plus get some dividends or get some money back along the way. So there's a way of transporting my money in time by investing it in the share market. I could, for example, buy bonds from the market. I could buy bonds from the government, who needs money to go build bridges and hospitals and all that sort of thing. So they borrow money by issuing instruments called bonds. So, and when I buy a bond, I give up cash. I'm lending the money to the government to go do those things, and the government pays me back my money sometime in the future, plus some interest.
Oh, very interesting. So there are a variety of participants in the market who are either lenders or borrowers
Absolutely correct.
in effect. Institutions and the markets and those instruments you have mentioned facilitate the flow of funds between these participants.
So finance is providing a number of functions. So finance is providing the means of exchange to transact. It's providing the institutions, the intermediaries, the people who go in between you and I, as as an investor and you as a borrower. It provides a transaction mechanism, the payment system to transfer money from point A to point B. It also provides the instruments we need, the bonds I talked about, the mortgage instruments, the share certificates, all those things, all those instruments which we need to make money move from one place to another in different forms.
So from this conversation it seems that all of this is very important to our economy as a whole. So should the population in general be financial literate, or is it just governments and big companies who should understand what finance is?
Well, look, transporting money to where it's needed is what finance does. So it makes sure, it provides the mechanisms to make sure money goes from where it's not needed at the moment, or it's to be invested, to where it's needed. So finance provides that function. It's very important. But the question is, if you as an investor don't understand finance, then chances are you will allocate your money into things that aren't necessarily going to give you what you expect. So, for example, if I put money in the bank account, I'll get a different rate of interest to what I get in the stock market in terms of a return. But guess what? Very low risk in the bank, very high risk in the stock market. So if I didn't understand that and I thought, well, I'll go invest in shares and in 5 years' time I'll have double my money or something like that, guess what? You may lose all your money because the company goes bust, and there's a risk in investing in the stock market, whereas there's no risk but a lower return in the bank account. So understanding where to invest your money, what kind of return you'll get, and what risk you're facing is really important. So financial literacy helps the economy operate more efficiently because it makes sure the money gets to the right place at the right time and where it's needed and used for the most productive.
How would you rate financial literacy among the general population? Do you think that the general population has enough awareness of finance?
I think
enough financial knowledge to be able to.
I think over the years it's improved, but we've got a long way to go. I mean, when you see episodes such as recently the Dick Smith company going down the tubes, and a lot of mum and pop investors getting caught in that, that means we've still got a ways to go.
Sure.
I mean, financial institutions and the government, the regulators, importantly, have a really important role to play in bringing along mum and dad investors, but making sure there's confidence in the system, making sure there's good regulations, and also educating the public about these things so that they make these investments and understand, and there's no shocks, there's no big scares. Because when
there is a role for government to educate the general population.
There's a role for government, there's also a role for financial institutions to make sure that the public they serve, their depositors, their investors, understand what the money's being used for and the risks they face.
Sure. In terms of a student looking at various possibilities of getting involved in the finance area, should they develop a basic understanding of finance or branch out into further studies in finance? What are the relationships between finance and other commercial disciplines, and if they are interested in finance, should they actually only study finance majors?
Well, finance is used in every type of company, and depending on your role in that company, obviously the degree of usage of finance will vary. But I can assure you that if you worked, for example, in marketing, you would absolutely be using finance to make decisions. For example, you want to launch a new product or invest in some new market to attract some new customers. Your boss somewhere will ask you, well, why am I doing this? I'm doing this because if I invest, say, $1,000 or $100,000 in marketing or developing this product, I will get back more than I put in. Because companies are about profit.
Yes.
If I worked in a hospital, I need to understand how efficient I am in delivering patient services, because at the end of the day I have to make sure I have finite resources, money wages, buildings, medical supplies, all those things are used to produce services, patient health. The best way to do that is to understand how efficient I am.
So does that mean I should study finance as such, even if I'm interested in marketing? Should I do a double major, or what is...
Well, that's a choice for each student to make in terms of what they're interested in. But
that's right.
I guess what I'm saying is that finance is used in everything. If you're a finance professional,
That's
as opposed
right.
to an ordinary, say, manager in marketing or human resources or in engineering, you will use finance there as well. But if you're a finance manager or a financial professional, then you could be working in a bank, an insurance company,
Sure.
in a funds management company or superannuation fund who manages money on behalf of a lot of us to make sure our retirement money is there. Or you could work in a stockbroker or as an analyst. So a number of different roles.
So there are a variety of roles open to me as a finance graduate.
So that's in a financial sector. But also in the corporate sector, if you didn't work in marketing or human resource or whatever, you could work in the finance department of large companies. And you could either be, say, working in the controlling part of the business where you manage, how you spend the money and the budgets and all that sort of stuff,
Sure.
and where you invest the money, or you could work in the treasury part. In other words, where to get the money, where to borrow it from, when to raise it, or when to invest it. So there's a number of functions involved in finance, either in financial institutions or as the finance manager within a non-finance
organisation.
Okay.
Thank you very much for your time, John.
No
We've
problem.
had a great conversation about what finance is and an insight into some important concepts.